My name is William Gallagher. I'm coming to you live today from the Market Traders Institute in Orlando, Florida. Today I'm going to walk you through the process. I'm going to take you behind the scenes here and kind of give you what I consider my quick start Forex program. I'm going to show you how you can use MTI's Forex trading strategies, also utilizing our charting software to start actually generating some profits right now in the Forex market. I'm going to show you a very simple strategy to get out of this market very quickly without having to know really any analysis. And I'll also take you into the analysis here. I'll show you an actual trade opportunity that I'm actually looking at. I'll analyze it and I'll explain to you why I'm looking at that as well. Now, before we begin, because I am going to be pulling up my charts, I am going to show you an actual, oops, hold on one second. Let me go back here. There we go. Yeah, because I am about to pull up my charts, I will be showing you some opportunity in the market here. Before we begin, I just want to let everybody know that trading does have its own form of risk involved, and you shouldn't invest money that you cannot afford to lose. Now, it is also highly recommended that you go through this education. You learn this trading strategy in its entirety before you begin trading and you become an educated, knowledgeable trader. Also, please be advised that anything I show you here today, do not take this as actual investment advice. I will walk you through several trade examples. I will show you a couple trade opportunities, but ultimately when it does come time for you to place a trade, that decision to make that trade is going to be yours and yours alone. So as I mentioned today, what I'm going to do is for those of you that are brand new, don't worry. I'm going to take a minute or two before we go into the market. I'll explain to you what the Forex market is, what we're doing in the Forex market. Today I'm going to teach you what is called the London Daybreak trading strategy. Very simple trading strategy to get in and out of this market very quickly. It's also very effective. I'm also going to show you today how to analyze utilizing our charting software. I'm going to show you some of the automated tools that are built into our charting software as well. I am going to show you a current trade opportunity that I am looking at, and I'm going to show you how to set up a demo trading account. And I'll show you how to get everything I show you here today as part of a trial. I'm going to show you how to get the charting software, how to get the strategies, all of this here for about the cost of a pack of gum to take it for a test drive. So it's not going to be very expensive to get an opportunity here. So like I said, I call this my quick start Forex program. So if you have had any interest in trading the Forex, or throughout the webinar here today, if you find interest in trading the Forex, it can make it very easy for you to get started here today. As Renee mentioned here, I have been trading in the investment market since 1998. I've also worked for a couple different financial companies, also did help start, launch, and build an entirely new financial services company from the ground floor up. Also a full-time active trader, but more importantly, I'm also a student of Market Traders Institute. So for those of you here in the room today that are brand new to this Forex market, I was once just like you. I was in a webinar just like you are here today. I was sitting back, and one of the things I want to point out is that even though I did know about the Forex market, I didn't understand the potential of the Forex until actually going through MTI's education. So what I did is I was in a webinar just like this. I actually went through their education, and then what ended up happening is that MTI, they started asking me to go out and start doing these types of presentations to get new people up to speed very quickly in the market. So like I said, what I'm gonna do is I'm gonna take you by the hand, get some of those basics, teach you some trading strategies, get these tools in your hand, put these tools in your hands here today so that you can make that decision as to whether you wanna be a full-time Forex trader. As I mentioned, I'm coming to you live from the Market Traders Institute here in Orlando, Florida. You can see the building right here. This is actually our building. I'm broadcasting out of the second floor of this building right now. Our building is a 70,000 square foot trading and training facility. So we have students that come to our building on a daily basis each and every day. That's why I want to mention this, because you can literally come to our building and get trained live in person right here, right in our classrooms here. So if you find the interest in that, you want to come here to Orlando, you can do that. If not, everything I show you here today, you can learn right from the comfort of your own home, right over the internet. I'll show you how to get some instructional videos here today. Now, we have gotten some accolades over the last 23 years. We've been around since 1994, trading in this market. I've trained over, actually almost probably about 50,000 students worldwide. We've got some accolades as we're going along. One of the ones I want to point out, maybe you might recognize this logo right here, Inc. Magazine. We are happy to announce that in 2015, Market Traders Institute was ranked 1,180 on Inc. 5000's fastest growing companies. In 2016, we moved up to 592. So we're looking for in 2017 to move into that top 500 here. Hopefully we'll be able to do that here. The reason we do that is because we're able to produce results for our students. And we also have gained a little bit of the attention from this gentleman you see on your screen right here. His name is Kevin Harrington. Some of you might recognize him. He's one of the original Shark Tanks on, he's one of the original sharks from the TV show Shark Tank. Well, he saw our presentation. He saw what we do here. And as you can see here, he says he's identified Forex investing as a great opportunity. He's also identified Market Traders Institute as a great company to train with. So he has partnered with us in what we call our Trade Like a Shark program. So we're happy to announce that as well. So I don't want to spend too much time on this here. You have a little bit of idea of who I am, who Market Traders Institute is. What I want to do is before we begin, I want to get an idea of what your trading experience is in this market. So I'm going to give everybody about 10 seconds here. If you can quickly look on your screen and follow the instructions here. What is your trading experience in the Forex market? If you are brand new to the Forex market, type the number 1 in. That's going to let me know that you have no experience in this market whatsoever. And I'll spend a little bit more time explaining what the Forex market is as we're going along to get you up to speed. If you do have a little bit of experience in this market, go ahead, type the number 2 into the chat box. That's going to let me know that you have a little bit of experience in this market. You may have been to a workshop or two like this, maybe even you're practicing a practice or a demo account. For my experienced traders out there, type the number 3 in. That's going to let me know you do have some experience in this market and you're priority trading in this market as well. So great. So it looks like, yeah, so Brandon's a 1, Isaiah's a 1, Luke's a 1, bunch of 1s. That's pretty typical. Brenda's a 1, Caleb's a 2. I got Julian. Looks like Julian's the only number 3 here. So yeah, it looks like most of you are brand new, so don't worry about that. Like I said, before I pull up my charts, I'm just gonna take a quick minute or two, get you up to speed. Now, for those of you like Julian, those of you that are experienced, just bear with me for just 1 minute. I promise you we're gonna be getting in to the live market here in just a second. I will explain that trading strategy very quickly here. So let's go ahead, let's get started. For those of you that are brand new, I'm going to explain to you what the Forex market is. I'm going to explain to you what you're doing when you're trading Forex currencies. I'm going to explain to you what a Pip is and why you want that. But more importantly, I'm going to show you how you can get started today. I'll show you where to get started trading in this market very quickly. So for those of you that don't know what the Forex market is, Forex stands for foreign exchange. We're trading currencies in this market. It is the largest market with almost limitless amounts of liquidity. There's over $5 trillion that is traded daily in this market. So there's a ton of opportunity for those of you that want to get involved in this market. Lots of opportunity to get in and out of this market very easily. That's what makes it a very liquid market. There's always people looking to get in, looking to get out. So it's very easy to get in and quickly in and out of your trades. The other neat thing about this market is that it's a very flexible market. There are 3 major trading sessions that go on in this market each and every day. You have the Asian session, you have the London session, and you have the US, the New York session. The neat thing about this is that these trading sessions, they overlap. So you can literally trade the Forex market from 5 o'clock p.m. on Sunday through 5 o'clock p.m. on Friday. 24 hours a day. So for those of you wondering, well, when do I have time to trade the market? You can trade it at 8 o'clock in the morning. You trade it at 8 o'clock at night, 1 in the afternoon, 1 in the morning. Lots of opportunities here. So once again, lots of potential in this market for those of you like you and me just looking to get a fraction of what this market offers. Now, another thing about this market that's really one of the nicest features about this market is that this market allows you to focus. Unlike the stock market and other markets where there are thousands of stocks that you can watch and trade, in the Forex market, there's really only about 60 different currency pairs to trade. The neat thing about this is that because we have 23 years of experience, we're going to show you which ones to pay the most attention to. In fact, actually today, I'm going to show you 6 currency pairs so you can really focus on 6 different currency pairs to watch on here. So it's a very large market, it's a very flexible market, and this market also allows you to focus. Now, when I pull my charts here in just a moment, you're gonna see a chart just like this. Now, let me quickly explain to you what we're gonna be looking at on this chart. What we're doing in this market is we're trading one country's currency against another. This is an attempt to figure out which one's going to gain in value against the other. So in this case here, if you look in the upper left-hand corner of my screen, you're gonna see that this chart is the Great British Pound, GBP, US dollar, USD, the Great British Pound, US dollar currency pair. So in essence, what's happening on this chart is that as the market's going up, the Great British Pound is gaining in value over the dollar. When the market starts going down, the pound is losing in value over the dollar. The dollar is strengthening over the pound. Now, these little rectangles you see on your screen, these are called Japanese candlesticks. What you're looking at is what's called a candlestick chart. Now, I'm not going to go into a lot of detail about what these candlesticks are, but they are a visual representation of whatever time frame you select on your chart. So in this case here, on the charts we're going to be pulling up today, they are going to be 1-hour charts. So for my brand new people, this is what I want you to write down. Each one of these candlesticks is going to represent what the market has done in 1 hour. Now, all I really need for you to know is that the white candlesticks mean that the market went up during that 1 hour time frame. They are called bullish candlesticks. The dark blue candlesticks mean that the market went down and closed down during that 1 hour time frame. They're also called bearish candlesticks. So all you need to know is that white means the market's going up and blue means the market is going down. Now, another thing I'll point out when I get into the manual analysis portion is that these candlesticks form what are called candlestick formations. We're going to look at these kind of like sign language in the market. They're going to help tell the trader's story. I've circled a couple here on this chart here. You can see in the bottom left-hand corner, this one's called a Morningstar candlestick formation. So this is saying, hey, Brenda, hey, Harry, Dylan, Carter, Braden, we're going to look for this market to U-turn and go upward in a bullish movement. This candlestick formation right here is called an evening star candlestick formation. This is saying, hey, Jordan, hey, Isaiah, Luke, look for this market to U-turn and go downward in a bearish movement. Now, I'm not going to spend a lot of time going over candlestick formations, but our charting software has a feature that will point out these candlestick formations for you. I'm actually going to show that, demonstrate that for you here. But for those of you who go through our full education, we'll teach you how to identify these candlestick formations and what they mean. Now, there's two other things we need to know about before we go into this chart, the charts. I need to explain to you what a PIP is. Now, PIP, P-I-P, it is an acronym. It stands for price interest point. So let me just quickly break this down the simplest way that I can here. Most of you probably already know that in the US dollar, there are 100 pennies. There are 100 pennies in the US dollar, and a penny, it represents 1/100th of a US dollar. If we were looking for a unit of measure that is smaller than a penny, it would be the equivalent to what is called a pip. Now, just as there are 100 pennies in the US dollar, there are 100 pips in a penny. So a pip, it represents 1/100th of a penny. If we were looking at this number right here, the first two numbers past the decimal point, these are your pennies. The next two here, these are your pips. So we're looking to capture pips in the market. They are fractions of a penny. I'll go into more detail here in just a little bit. Now, you're probably wondering, well, how much are these pips worth? In this market, we utilize leverage. This leverage is going to give you more buying power in this market. This leverage is going to be provided by your broker. This is going to allow you to place the trades and to generate a leverage return on the pips that you capture on your trade. So let me quickly explain to you here that in the Forex market, we trade in lot sizes. We have three major lot sizes. We have what's called a micro lot. A micro lot is about a $20 investment from your trading account. Your broker is going to borrow this investment size. This is going to allow you to place the trade and to generate that leverage return on the pips. Now, if you're trading in a micro lot, each pip that you capture is going to be worth about 10 cents. So I'm going to teach you a trading strategy today where we're going to be going after 50 pips per currency pair per day. If we capture those 50 pips with a micro lot, we're going to generate a return of $5. Now, in a mini lot is a $200 investment from your trading account. Each pip is now going to be worth $1. So now those same 50 pips that we capture, they're going to be worth $50 in profit. So we have a micro lot and a mini lot. We also have what's called a standard lot. Standard lot is the standard by which most traders strive to achieve in this market. Now, a standard lot is about a $2,000 investment from your trading account. Each pip is now going to be worth $10. So those same 50 pips now that we capture, they're going to generate about a $500 profit on that here. Now, I know there's some of you here in the room say, well, William, I can't afford to put out $2,000 per trade. Some of you might be saying, well, you know what, I can't afford to put out $200 per trade. Well, most of you, when you get started, here's the neat thing about this. I'm going to show you today how you can set up a demo trading account where you don't have to invest any money and you actually practice trading in this market before you invest any money. And then probably what you're going to do is you'll probably start off investing in a micro lot or maybe even a mini lot. But the neat thing about this is that you'll start off trading in a micro lot account. As your confidence level builds, as your account level builds, you'll go from a micro lot to a mini lot. And then once again, as your account level builds, your confidence level builds, you'll go from a mini lot to a standard lot. But what I want you to focus on today is just opening up a demo account, practice trading with the strategy I'm going to show you here today, with the analysis with the charting software. Then when you're ready to invest, you're going to start investing in a micro or mini, or if you want to go gangbusters, go ahead and invest in a standard lot. But I suggest you start off crawling first, learn how to walk, and then start running before you invest a lot of money in this market. I'll show you how to do that here in just a little while. Now, there's one person I need to introduce you to before we get started. This gentleman you see on your screen right here, his name is Joshua Martinez. He's one of our product experts here. He's trained thousands of Forex investors. He took the same trading strategy I showed you here today. He invested $500 in his trading account, and through the strategy, he generated over $39,000 in profit off of it. So the reason I talk about him is because he is the creator of the strategy. More importantly, he's going to be giving you videos here. I'll show you how to get some videos from here where he's going to be able to teach you in more detail about everything I'm about to show you here today. Now, to kind of give you an idea of what his track record is, you see here, this is his MyFX book account. This is actually up until October. I need to update this for last year, but he wound up capturing over 38,000 pips last year in his live account. It's this year so far. As of towards the end of May, he's up about 6,000, about 7,000 or so. I need to update this as well. So you see the track record he's had here in trading in this account. So kind of give you an idea of the type of person that has actually created this trading strategy here. So I'm kind of giving you the strategy I'm about to show you here right now. It's called the London Daybreak trading strategy. I'm going to give you my Cliff Notes version of this. I'm going to give you kind of an overview of it. Those of you that take advantage of this charting software trial here today, you will get an actual video from Josh where he goes into much greater detail about this here today. So I don't have a lot of time to go into a lot of details, but you're going to get a whole bunch of videos learning on how to do all this. I'm going to explain that here in just a little while. I just want to leave everybody high and dry. If I didn't get to point out something here today, I want to explain to you that I'm going to give you the overview. He'll give you a little bit more details on that here today as part of the charting software trial. Now, here's where you're going to want to start taking some notes. Josh will go into a little more detail about all this here, but for those of you that want to take some notes, we're going to be looking at these 6 currency pairs that you see on your screen. This is part of the London Daybreak trading strategy. We're going to be looking at the Great British Pound Canadian dollar. We're going to be looking at the Great British Pound US dollar, the Great British Pound Japanese yen, the Great British Pound Swiss franc, the Great British Pound New Zealand dollar, the Kiwi, and the Great British Pound Australian dollar, the Aussie. These are the 6 currency pairs I'm about to pull up for you. Now, as I just mentioned here a minute ago, our goal is to capture 50 pips per currency pair per day on the low end here. That's our goal here. Now, we're not going to be trading this trading strategy every single day, but you're going to have 5 opportunities each and every week on each one of these currency pairs to utilize this strategy. I'm going to show you the strategy. Josh will go into a little more detail explaining when you should do it, when you shouldn't, but I just want to go ahead and give you the strategy. You want to learn more as part of the trial period here, he'll give you the video that goes in a little more detail here. So what I'm going to do right now is I'm going to go ahead, I'm going to pull up my charts, and we're going to actually start going through the strategy. I'm going to start off showing you a very easy way of getting in and out of the charts, in and out of this market, utilizing the London Daybreak trading strategy on these 6 currency pairs. Then I'll pull up the charts here. After we get done here, I'll show you how to do some manual analysis using the software, and I'll show you a current opportunity that I am looking at right now. So let's quickly go through here. As I mentioned, we're looking at the Great British Pound Australian dollar here in the upper left-hand corner, Great British Pound Canadian dollar in the middle center, top here, Great British Pound Swiss franc upper right. We have the Great British Pound Japanese yen in the bottom left, Great British Pound New Zealand dollar bottom middle, and we have the Great British Pound US dollar here. And as I mentioned, each one of these here is on a 1-hour time frame. So let's go ahead. I'm going to pull up the Great British Pound Japanese yen, and I'm going to explain what we're looking at here in just a second. So let's go ahead, let's start talking about this. This is what we call the London Daybreak strategy. So let me give you a quick overview before we actually go into the charts. What we're going to be looking for as part of the strategy, and this is where you're going to want to take some more notes, we're going to be looking for this market to form its initial high or low for the day. We're going to be looking for this between 2 o'clock a.m. Eastern time and 5 o'clock a.m. Eastern time. So between 2 o'clock and 5 o'clock a.m. Eastern time, we're going to be looking for the market to either pull back and form its low and rally up, or we're going to look for the market to rally up, form its high, and pull back. Now, the reason for this, as you remember, I just explained that there are 3 major trading sessions in this market. What you have going on here is you have the close of the Asian session, and you have the opening of the London session. So we're looking for this directional movement coming from this time period right here. Now, we're going to be also looking for our opposite, high or low for the day, and we're going to be looking for this between 8 o'clock a.m. Eastern time and 2 o'clock p.m. Eastern time. The reason for this is because you have the close of the London session and you have the opening of the New York session here. So what we're looking to do for is this directional movement, either rallying up or pulling back and going down. So I'm going to show you a strategy here, very easy strategy to go after this here. So what I also explained to everybody here is that we've found that each one of these 6 currency pairs has what's called an average daily trading range, meaning that we're looking for each one of these currency pairs to move a minimum of 50 pips on the low end to over 200 pips on the high end each and every day. My strategy I'm going to show you here is we're simply going to be going after a home, get on first base. We're going to be going after 50 pips. And I think in Josh's video, he'll show you how to go after more than 50 pips, but I'm simply going to show you a very simple strategy to go after those 50 pips here. Now, if you remember, if you're trading with a micro lot account, each one of those pips is going to be worth 10 cents. We're going to be looking at $5 in profit per currency pair per day. With a mini lot at $1 per pip, we're looking at $50 in profit per currency pair per day. And my standard lot traders, you're going to be looking at $10 per pip. We're going to be looking at going after $500 in profit per currency pair per day. So you can go ahead and write this down or do a quick screenshot of this. We're going to go ahead and now we're going to go back into the charts and we'll actually show you the actual strategy. I'm going to give you kind of an overview here of what we're looking at. So let's go ahead, let's pull this back. And what I've done is I've already come in here and I've highlighted some of these right here. So if you look right there, bam, there's our 3 o'clock a.m. candle, May 23rd. And you see we had directional movement coming off that. In fact, off that candle right there, we had directional movement. If you take it to the peak there, that was 103 pips. We had off of this one right here, this one dropped down 56 pips. Now look at this one right here. This one dropped down 133 to that point, and then the next 3 o'clock a.m. candle, it dropped down another 104. We had a little one right there. Was about 30 pips. Not all of them is going to be big. This one here moved up about 96. This one here moved up about 83. This one rallied up about 77. And then this one right here, which I believe is Monday. No, this is last Friday. This is last Friday right there. Last Friday, this one dropped down right there, 144 pips here. So what I'm going to do is I'm going to start right here. Let's bring this up here to this candle right there, bam. So this is going to be on Monday, Monday morning, 3 o'clock a.m. That's where we're going to start off. I'm going to take you to the beginning of the week and we'll show you some of the trades on how this actually worked here. Now, before we move forward, somebody actually here, Jonathan just asked a good question here. Jonathan asked, why does this happen? Why do we get this directional movement happening like this? Well, let me explain here before we actually go in here. It's been said here that during the European market, they're processing the largest bulk of the Forex transactions. So what ends up happening during this period is you have the banks, they're processing their orders, and this provides a huge injection of volume, and this helps to provide this directional movement here. So what I'm going to do is I'm going to teach you a strategy here to help take advantage of these directional movements in the market here. So let's go ahead, let's bring this back here. I'm going to zoom in nice and tight, make it nice and big. And actually, let me answer another quick question here that Jack just asked here. Jack was asking about this software here. Yeah, this charting software that you're looking at right here. This is the charting software you're going to get in your hands here today. It's part of our trial, charting software trial. So it's called our Ultimate Charting Software. Normally, you have to be a student of Market Traders Institute to get this charting software. For everybody here in the webinar, you don't have to be a student here. I'm going to show you how you can get this as a part of a trial period here to try it out, absolutely risk-free here. So for a very, like I said, for about the cost of a pack of gum, you can actually take this for a test drive here today. And there's a lot of neat features that are built into the charting software. I'm going to go over them as we're going along here. So what we're going to do is we're going to get started right here. This is our 3 o'clock a.m. candle. Now, when I go into my manual analysis, I'm going to explain this here in a little bit more detail. But there's going to be 3 questions we're going to want to answer before we actually enter into trade. We determine which direction is the market going. That's gonna be question number 1 we need to answer. Number 2, we determine where and why to get into your trade. And then number 3, we determine where and why to get out of our trade before we even get into this trade here. So we're gonna answer each one of these questions very easily here with the strategy I'm about to show you, just like that here. And let's see if I can move that. Hold on one second. My mouse is acting up. There we go. So, and oh yeah, actually Christian just asked a good question. What is this here? This is the London Daybreak strategy. Once again, for those of you that may have missed it, and we're actually basing this. This is going to be based off of the close of the 3 o'clock a.m. candle. So essentially, effectively, you'll be starting this at 4 o'clock a.m. Eastern time. So that's why I'm pointing out right here my 3 o'clock a.m. candle, because once this candle closes, we're ready to begin the strategy. So let's go ahead, let's get started. And if you're taking notes or you haven't been, this is probably gonna be a good place to start taking notes. Here's our strategy. At the close of that candle, we're gonna set up 2 pending orders. One pending order is gonna go 10 pips above this high. So that's 36. We have set this at 46, right about there. This is going to be our entry buy position. It's going to be a pending order. We're not in the market until we get triggered into this position here. So our entry buy is going to be plus 10 pips above the high of that candle here. So yeah, so the high is right there. The high, and it's going to be 10 pips above that right there. So our entry buy. Now we also got to place an entry sell 5 pips below the low. So we have 142.11. So we're set this at 142.06 right there. I'll type this out for everybody. This is our entry sell. Our entry sell is going to be minus 5 pips below the low. And just to answer any questions we have here, the low is this candlestick wick low. So it's going to be 5 pips below the low. So that's step number 1. Step number 1 is going to help us answer question number 1. Which direction is the market going? This can help us to determine which direction, or give us that educated opinion as to which direction we believe the market's going to go. Give us that directional movement here. So we have our 2 entry buy, entry sell. Let's go ahead. Let's see what ends up happening on this trade right there. So bam, 1 hour later, the market does in fact come up here, triggers our entry buy. Our entry buy just became a market buy, meaning that we now have that educated opinion that we believe the market is going to go bullish. We're looking for that directional movement to go bullish during that time period right there. So we've now determined, number 1, which direction do we believe the market's going. We believe it's going bullish, and where and why to get in. We are now actually physically in the market. We are in a market buy position. The first order of business, once we get into that position, we get triggered in, we're going to close out the opposite order. We're not looking to sell our position. We're looking to buy this position right there. So what we need to do right now is we need to protect ourselves on this trade. So we're going to set a stop loss on this trade. Now our stop loss is going to go right there at the low of that candle. It's a little bit different when buying and selling. So let me set this up here. Stop loss when buying. When we're buying into the market, it's going to go at the low of that candle. So now we have our protection set up here, meaning that if the market goes against us, in this case here, if the market goes against us, we are going to be risking about 36 pips on this trade. So we need to determine where we want to get out of this trade. Now, does everyone remember what our minimum is here? Our minimum is 50 pips. So let me go ahead here. Let me delete this. And I'll type that out for everybody. So our minimum is going to be 50 pips. So let's go ahead. Let's measure 50 pips. It's probably going to be about, what, 16? Let's see here. It should be about, oh, maybe not. 96. I'm sorry, 96. So 142.96. So right there. Now I'll type this out for everybody. Our target, which is also referred to as our limit, which is also our exit from this trade, that's going to be either 1, a minimum, I'm sorry, it's going to be either a 1-to-1 risk ratio or 2 a minimum of plus 50 pips. Because we were looking for this market to move at least 50 pips on the low end here. So that's going to be our target. So in this case right here, if you remember, we're risking 36 pips on this trade. So that means our target's going to be 50 right here. I'm going to show you how to go after 50. I believe in Josh's video, he's going to actually show you how to go after more than those 50 pips by moving your stop loss up. So we have our entry, we have our stop loss set, we have our target. Let's go ahead and see what ends up happening on this trade. So we have 1 hour later, 2 hours later, 3, 4, 5 hours later, the market does in fact rally up, triggers that. We're now out of that trade. We just captured 50 pips. So on Monday, on the pound yen, we'd be up 50 pips. Now, to quantify that, if you're trading a mini lot at $1 per pip, you just made about $50 in profit. Now, my standard lot traders at $10 per pip, you just made $500 in profit off of that right there. So there's Monday's trade right there using this strategy here. Now, Jonathan just brought up a good question. Jonathan says, so you're telling me we have to get up at 2 o'clock in the morning or 3 o'clock in the morning to do this here? Well, Jonathan, and those of you that might be thinking that, think about this. Would you be willing to get up at 2 o'clock in the morning, plan your trades, get them set up to capture these type of results utilizing this strategy? That's only a decision you can make. Now, those of you that might be across the sea, that might already be over in London, great, you can do this during the day. But you know, those of you that are stateside here, yeah, you might have to get up a little bit later, but then again, these are the type of results you're looking for. Would it be worth it to do this here? So that's Monday's trade. I'm running low on time. Let me quickly bring this now to the next trade. I think I have that set up as well. And there we go, right there, bam. I think this is the 3 o'clock. There we go. This is yesterday morning's trade right there, 3 o'clock a.m. Let's go ahead and let's plan this one out the same way we just planned the other one. We're not going to do anything different on this one. Condense it down just a little bit here. So after you remember the first step at the close of that 3 o'clock candle, we're going to set up our entry buy, which is going to be 10 pips above this high. So 96, we're going to set this at 106 right there. I'll type this out once again. The entry buy, it's a pending order. We're not in the trade until we actually get triggered in. It's going to be plus 10 pips above the high. Right there. So entry pip 10 pips above the high. Sorry, entry buy and our entry sell is going to be 5 pips below the low. So 61, we'll set this at 55. Right about there, bam. And I'll type this out as well. So hold on one second, let me fix my mouse. There we go. There we go. So entry sell is going to be minus 5 pips below the low. Yeah, and actually Lucas just asked a good question here. Lucas says, why 10 pips above, why 5 pips below? That's something that I don't have a lot of time to go into. I think Josh explains it in his video. So yeah, those of you like Lucas and they're wondering about that, yeah, in the video, I think Josh goes into that detail here. So once again, there's a 3 o'clock a.m. candle. We have our entry buy, entry sell, and let's see what ends up happening here on this one. So 1 hour later, bam, the market does in fact go down there and triggers our entry sell. That means our entry sell just became a market sell. What this means, condense this here, is that we now have that educated opinion to believe that this market's going to go bearish. We're looking at that directional movement going bearish off this here. So once we get triggered in, we got triggered into that trade, the first order of business to come in here and cancel our entry buy because we're not looking to buy the market, we're looking to sell the market. So that's step number 1. Step number 2, we come in here and we set our stop loss. It's a little bit different here. When selling the market, our stop loss is going to go 5 pips above this high. So 96, so we'll set that at 142.01. I'll type that out. Stop loss when selling is going to be plus 5 pips above the high. There we go. So we have our entry, we have our stop loss set. In this case here, we would be risking on this trade. I'm using my measuring tool here. We're measuring or risking 45 pips. Everybody remember what our minimum is? Our minimum is 50 pips towards our target. So we'll come in here. That should be about, what, about 140.05, I believe. That should be about 50 pips right about there. So 141.05. There we go. I'll type that out once again. our target, which is our limit, which is our exit on this trade, is going to be either a 1-to-1 risk, or 2, a minimum of 50 pips. And in this case here, we're going after that minimum of 50 pips. So we have our entry, we have our profit, our stop loss set, we have our target. Let's go ahead and see what happens on this trade here. So 1, 2, 3, 4 hours later, the market does in fact goes down, triggers our limit. We just captured another 50 pips. So not too bad here. On Monday, we would have made 50 pips off of the pound yen. And on Tuesday, we would have made 50 pips off of the pound yen here. So that would have been with a mini lot, you would just generated another $50 in profit. With a standard lot, you just generated another $500 in profit off of that one. Not too bad here. So what I'm going to do is, in the interest of time, let's go ahead, let's bring it to this morning's trade. Let me delete some of this here. There we go. So this week so far, you would have generated 50 pips off the money trade, 50 pips off of Tuesdays. Last night, we'll bring us now to this morning. And it's right there, bam. So in this case right here is our trade from this morning. And look at that, bam. So that would have been about, there was 132 pips of directional movement coming off of that one right there. Not too bad. Now, if you look at some of the other ones from this morning, here's the pound Aussie. There's that one right there. Directional movement coming off of that one. You see the directional movement off of that one, that one, that one, that one. So I'll let everybody, you have the strategy now. I'll let you go ahead and when you get this in your hands, the first thing I want you to do is go ahead and start playing around with this here. I just want to demonstrate that for you. Now, once again, that was the London Daybreak trading strategy. 6 different currency pairs going after 50 pips per currency pair per day. That's going to give you 30 opportunities each and every week. So the question you have to ask yourself, even with just a little bit I just showed you here, do you think that you'd be able to capture maybe 1 or 2 of these each and every week, especially if you have a video from Josh, the creator of the strategy, going into more details explaining how this actually works here. So I just want to get into here, show you a very simple trading strategy, get you up to speed. Once again, this is part of my Quick Start Forex program. What I want to do right now, though, is I'm going to pull the charts back up, and I'm going to show you how I manually analyze the market utilizing our charting software. Show how easy it is to find trading opportunities in this market. So our charting software, it has a built-in auto Fibonacci tool. This is exclusive and it's patent pending. We're the only ones that have this. We have an auto Trendline tool. I'll demonstrate that for you as well. We have a King's Crown tool. We have a Candlestick tool. I'll show you that as well. I'll show you how our charting software can send you email and text alerts right from the charts. I'll show you how you can actually trade directly from the charts as well. We have workspaces. That workspace I just pulled up for you here. This is called the London Daybreak Trading Strategy Workspace. I believe you'll get this as a free bonus here today as part of the charting software. I'll explain that here in just a little while. I'll show you how you can do demo trading and auto trading right from these charts as well. So I'm gonna go ahead, let's pull back my charts up one more time. And let me show you the trade opportunity I'm looking at right now. I believe it's on the pound yen right there. Let me go ahead and minimize that. Oops. There we go. Actually, it wasn't the pound yen. It's pound New Zealand. Yep, there we go. Pound New Zealand here. So let me go ahead and let me show you here what we got going on this. There we go. So I'll back this up just a little bit. There we go. Now, the neat thing about our charting software is that we have these built-in tools. Let me go ahead, let me pull up, hold on, let me see. Maybe it was the pound Australian. Bam, okay. Let me show you, maybe I'll show you the pound New Zealand. Let's go ahead, let's show you the pound New Zealand here. And let me quickly explain to you here, once again, there are 3 things we're looking at to answer before we go in. Which direction is the market going? And I'm gonna show you here, we use a trend line for that to help determine that. Number 2, where and why to get into a trade. And number 3, where and why to get out of the trade. So first of all, let's back this up just a little bit here. I'll show you, explain your direction. Now, what we've done here so far, going back here just a little while, if we use a trend line, and come here and draw a trend line just like this, you can see here that the market was below this trend line in what we call the sell zone. We were looking to take selling positions while the market was below that, and then when the market breaks above that trend line, we are in the buy zone. Meaning that when we break above that trend line, we're looking to take buying opportunities. Now, I just quickly came in here and just drew a trend line just like that. The neat thing about a trend line is it helps to take some of the fear out of the market. However, I just came in here. That might not be accurate. So we have what's neat thing about it is I can delete that. We have a smart trend line tool to make sure I draw this accurately. I can come in here right about there. Bam. Hold on. Zoom in a little bit more on that. There we go. So if I draw my trend line just like that, you can see here if I extend it, we have a tool here that quickly, automatically drew our trend line just like that. So you see what ended up happening here is that the market was below that trend line, broke above, we're now in the buy zone. So we'd be looking at taking buying opportunities. Then what ends up happening is that the market rallies up. And if I come in here and draw my trend line down here, let me delete that one. If I come in here and I draw my smart trend line coming up here, there we go, bam. And if I draw an inner trend line right there, you can see here what ended up happening is that the market rallied up, was in the buy zone, came up here, U-turned, is now broke my inner trend line. In fact, actually, let me draw another inner trend line right there. And show 3 occurrences where giving me even more corroboration. Anyway, if I draw my trend line, I'd probably go something like, that. So it broke my inner, my other inner is just like that. So as you see here, the market now has broke below that trend line. I'm now in the sell zone. Now we can't simply, or actually could simply just draw and jump into the market selling, but as an educated trader, we have to answer the 3 questions here. We have to determine where and why to get in, where and why to get out. So as an educated trader, we're gonna use some tools to answer questions number 2 and 3. Now, one of the tools I'm gonna utilize is called the Fibonacci Tool. This will help us answer questions number 2 and 3, where to get in, where to get out. Now, the Fibonacci tool, what we determined is what we found in this market is that the market tends to move in waves. As it's going up, it makes higher highs and higher lows, and when it's going down, it makes lower lows and lower highs. We have found that the market tends to move in what's called an A, B, C, D pattern. As it's going up, and as it's going down, it's going to go in a downward A, B, C, D pattern as well. Now we have a tool called the Fibonacci tool that when we determine this A to B boundary, and we can teach you how to determine this, and what we can do is we can spread our Fibonacci tool from A to B just like that. The reason for this is because we have found that in between this A and B boundary, there's high probability of this market's going to pull back or what's called retrace. These colored lines here you see in between the A and B boundary, these are called retracement lines. These are hidden levels of support, meaning that we're looking for the market to pull back to one of these levels and bounce off of it and U-turn. If the market were to pull back and form its C point here, form this U-turn, I'll show you here in just a minute how we can find this C point. But if the market pulls back and U-turns at one of these red Fibonacci retracement levels and we buy into the market after that U-turn, because it pulled back to one of these red retracement lines, we're gonna be looking for the market to go up to this red line right here. These are called extension lines. So what we're essentially looking for this market to move in this ABCD pattern is we're gonna be looking for it to retrace, U-turn, and then extend. And the neat thing about our Fibonacci tool here is that we've color coordinated our Fibonacci tool red to red, blue to blue, and green to green. So if you can match colors, you probably understand how this Fibonacci tool works. So if the market were to pull back to the blue retracement level and U-turn, form that C point, we would, if we buy in the market after that U-turn, we would hold our position, exit at the blue extension, blue to blue. If the market pulls back to my green retracement level and U-turns, and we buy into the market after that U-turn, we're hold our position, exit at the green extension. So yeah, red to red, blue to blue, and green to green. Now, I know I'm going pretty fast here right now. The neat thing about this is that as part of trial software here, you're going to get a detailed video here explaining how to use Fibonacci's and all this here. I'm kind of giving you just an overview. You'll get a video here that's going to show you how to use Fibonacci's as well. Just want to show that here as well. Now, the neat thing about this is that the market, when it's moving A, B, C, D up, we can use our Fibonacci's. And when the market is going down, we can do the exact same thing. A, B, C, D. The same thing applies as the market is going down. Now, I kind of gave you a very basic Cliff Notes version of how these Fibonacci's work. The neat thing about this is that we have a tool that does all of this automatically here. So all we have to do here is part of our using our what's called our smart Fibonacci tool, just like that smart Trendline tool. All we have to do is come up here to the high point right here, right up there, and we just have to click our mouse and bam, and we come over to the next one, just like that, bam. And what this has done is brought us to our current ABCD right there. So we had one ABCD, two ABCD, so there's our next A to B boundary here. Now, what happened here, and this is something for those of you that go through education, what we have found is that the market doesn't really tend to sometimes go A, B, C, D. What will happen here is you can see what happened is that the market had a very shallow retracement. What it did do though is it gave us a very shallow retracement. I'll give you a freebie here. I'll show you what ended up happening here. It didn't pull back to this top red retracement level, but it did pull back. It did come down here to, it came down here right around one of these, either 1.8 or 1.27. Either way, it doesn't matter, because what we found is in our education is that if the market does not pull back to at least this top, this beginning red retracement level, we found that if it comes up to one of these levels, there's a high probability of it coming back, and you see right there, bam, it bounced right off that 3A2 and it formed its C point right there. And if you notice here, my candlesticks are color coordinated. We have those candlestick formations. We have a built-in feature of our charting tool, just like this here. We can turn that on. Oops, just like this. And you can see here, we had a red bearish candlestick formation right there, letting me know to look for this market to U-turn. And there have been other opportunities right there, right there, right there, here, and here, looking to sell this market. Now, we had a red retracement pullback right there, so we're going to be looking for this market. See, pull back right there to the top red retracement level. So we're going to be looking for this market to come down here to the red extension here. So as you can see, what ended up happening is a U-turn came down from this U-turn. We'll say if we got in right there selling the market, that would have been 403 pips. Now, the neat thing about this is that from where we are right now, you see there's now a red candlestick formation happening. There's another 187 pips to come down to this level. So what I'd be looking for, let me zoom in on this to show you everybody why I'm looking for this to come down. Oops, let me delete that. I'm going to be looking for what is called a counter trend line break. So what I'm going to look for is this market to break below this counter trend line break. So if I were to come in here, if I draw, let's just make up some rectangles. Let's say that the market does this and it breaks down below my counter trend line. I'm going to look to sell it right there. I'm going to look to sell it down to here. And in that case, when it breaks below this counter trend line, I'm going to be looking to go after about 148 pips of opportunity right there. So I know I went pretty quick on this here. You can actually do a screenshot of this, the pound New Zealand, look for this here. Now this is on a 2-hour time frame. What you might want to do is you can trade this on a smaller time frame. You can trade this on a 1-hour time frame, maybe even a 30-minute time frame if you want. You go after, you have a better risk reward ratio if that pans out better for you here. So that's on the pound New Zealand on the 2-hour. I just kind of showed you this as well. So I know I've got, well, I'm running very low on time here, my friend. So here's what we're going to do. I'm going to show everybody here some of the neat things about this charting software trial. You're going to get the, oh, actually, here, hold on one second here. I do have time for this. The neat thing about our charting software is that you don't have to sit in front of your charts and wait for the market to break below that trend line. You can come in here, right click on that counter trend line, and we can add an alert on that trend line, meaning that when then the market crosses below that counter trend line, it can send you an email, it can send you a text alert alerting you that it's going on there. And you can simply just pull up your charts and come in here. Now, there's also a feature on here. If we want to simply to buy into the market, let me see here. I can come in here. do a market buy, and we can show you how to connect your trading account right to the charts, and you can place your trade right from the charts. Or maybe we want the market to get us into the market when it breaks below. We can click on this, and we can add an alert. And what we can do here is we can have it set up to actually buy when it goes below there. There's all kinds of things here neat about this. I just want to point that out here. So you can trade directly from the charts. The other neat thing about our charts is you can save these workspaces here. So if there's certain different currency pairs you like working on, you save it as a workspace, and you save those workspaces either to your computer or to the cloud. So what I did today is I'm actually working in a different office today. I saved my workspace on a different computer and came in here and was able to open it up right from the charts here. So all of this is included as part of this trial. Now, as I mentioned before, normally you'd have to be a student of Market Traders Institute to get this. But what we're gonna do here today is we're gonna give you a 14-day trial to take this for an opportunity here. Now, as part of this trial, I'll go ahead and explain this right now. You're going to get a bunch of different videos that come include this here. Joshua Martinez, the creator of the London Daybreak, he's going to onboard you here. He's going to show you how to set up a demo account, how to enter into the market and close out of the market. He's going to show you how to get his 3 free workspaces, and he'll show you how to import them. And those Fibonacci's I showed you, you're going to get a detailed video explaining how those Fibonacci's work as well. I'll show you how to set up your charts, how to use the toolbars, how to use the custom indicators. I didn't get a chance to show you that, but we'll teach you that. We'll show you how to use that Fibonacci, the auto Fibonacci tool, and we'll show you how to link this up to your broker and how you can create your own trading workspaces. We'll show you how to back up everything as part of it. Show you how to deploy your system. We'll show you how to set up your systems to auto trade and all these different things as well. Show you how to do that. Now, also that London Daybreak trading strategy, you're going to get a video from Josh on that, and you're also going to get a live webinar session each and every Friday. So those of you that take advantage of this trial software, the charting software trial here today, you'll get into a live webinar this Friday with either myself or one of my associates, where over the next couple of days, you'll get to try the software out. Take some notes as you're going along, because on Friday, you'll get into a live webinar where you can ask them questions just like you're asking questions of me right now. All of that is included as part of this trial. Now, as I mentioned before, this trial, the charting software normally is exclusive to MTI students. You have to be a part of one of our ultimate trading software packages to get access to the charting software. Normally, it would cost you $249 a month to get access to the charting software. But as part of Investor Inspiration for this special webinar right now, here's what we're going to do. As I mentioned at the beginning of the webinar, I told you I was going to make this very affordable. You're going to get this, all of this here today to take for a test drive for 14 days. And it's only going to cost you $1. The charting software, the videos, everything I showed you here today, it's included as part of that trial software. So the neat thing about this is that if you choose to go beyond those 14 days, you're not gonna be locked in paying $249 a month. We'll lock you in paying $59 a month for access to the charting software. It's not on a contract, it's on a month-to-month basis. But I want everybody today, though, is to simply focus on taking it for the 14-day trial. Open up a demo account, link it to your charts, practice trading in this market, use the London Daybreak trading strategy, decide if this is for you. See if the Forex market is for you. If not, you've risked $1 here today. If you choose to go beyond that, you won't be paying the $249 that our students are paying. You'll get locked in paying $59 a month for that right here. So the neat thing about this here is that you're also going to get 3 free bonuses from Josh as well. So here's what we're going to do. Those of you, a couple of you asking how do you get started, what I'm going to do right now is I'm going to send out a link to everybody in the room right now. So you go ahead, click on that link, just like that here. I got somebody just asked here about that. Let me type that into the box right here. Somebody said he didn't get the link here. Hold on, I'll send that out as well. Give me 1 second here, John. I'll get that out to you. Yeah, if you didn't get the link, let me know, and I will send that out to you right now. So let me send that. There we go. So yeah, look in your questions box, look in the chat box. You should see this link right here. You go to this link, and that's the first step of getting enrolled into this here. So let me go ahead and let me show you here. The first step is enroll in the Ultimate Charting Software 14-day trial. You click on that link, it's going to take you to this page right here. Now, everything's gonna be in detail right on this page. What you do is you enter your billing information, enter your payment information, activate your software trial, and you'll be logged in and registered. Now, this is only for today. Yeah, so yeah, Nathan just asked, how long is this good for? This is only for this webinar here today. So I highly recommend clicking on that link. That's the first step. getting enrolled into this. It's only going to cost you $1 to get enrolled. All the details as part of this here today are disclaimers, our risk disclaimer, cancellation policy, terms and conditions. They're all on this page if you want to check that out. But you're going to need to register for this here today to get locked in at that $1 trial. Now, here's what's going to happen. You'll get locked in. As part of this trial, you'll probably receive one email letting you know that you are in fact registered for this trial. You'll probably get another email that's going to give you access to log into the backend portal. I'll go over that here in just a second. But the first step, click on that link, register for the Ultimate Charting Software Trial. 14 days, go ahead and take it for a test drive, see if this is even for you. Now, you'll also get to go through those video lessons. That's the next step. Register for this charting trial, get access to the program, go through the lessons for the charting and the London Daybreak. You get to go through all those here today. Now, you can also set up a trading account, set up a demo trading account, Forex.com, Oanda. I use Forex.com, so I can talk about them, but all you have to do is do a Google search for Forex demo trading account. Any of them, don't pay any money for it. You'll be able to set up a demo account to actually practice trading in this market. And then through those videos, we'll teach you and show you how to actually register on how to register for, actually link your account to our charting software to be able to trade right from the charts here. So you can actually start practicing trading today. The market is open right now. Get this in your hands today, practice trading in this market right now. Try out the Ultimate Charting Software for 14 days. If in those 14 days, if you decide this is not for you, you cancel and you owe nothing beyond that $1 that you take for the trial. Now, if you choose to go beyond those 14 days, you're going to be locked in for the $59 a month, but that is only on a month-to-month basis. There are no long-term contracts as part of this here today. As I also mentioned, get the charting software in your hands here today. Take it for a test drive. If you have any questions between now and Friday, write them down. On Friday, you will be in another live training session with either myself or one of my associates, and they'll actually walk you through and show you how this actually works here. So what I want to do right now is let me explain to everybody that you're going to get this for 14 days. If for any reason those 14 days, you can simply cancel. You contact our customer support number. I'll pull this up here in our email, and that's it here. You can see all the full details of this here on that here. So let me go ahead and pull this up here because I only have about 1 more minute here before I have to leave here. But you might want to write this down. This is our 800 number, our customer service number. They can answer better some of your questions. I'm going to try to answer some of your questions here in the next minute or so. But if you have any additional questions, or if you register for this and you have any trouble accessing it, give us a phone call. We'll help walk you through here. Yeah, I got a couple of you here that actually said you just registered. Samuel, thank you for that. Nathan. Caleb says he just registered. Yeah, if you are registering for this, go ahead. Just go ahead, type it in, send me a quick message, let me know that you did in fact register and it did in fact go through here. Thank you for that, Brandon. Brandon says he did register for that as well. So once again, the quick steps here as part of this, click on that link. Oh yeah, a couple of you saying you didn't get the link. I'll send that out one more time to everybody. Yeah, look for it in the questions box or the chat box. I'm sending this out to everybody right now. Bam. There we go. Oops, hold on. Let me send that out. I just accidentally sent that to myself. Let me send that to everybody in the room. And I will send that out once again. There we go. Okay, bam. So yeah, you should have that right now. That's the link to click on. Register for the charting software. You'll get the emails letting you know you are in fact registered, and then you get another one letting you to log into that backend portal where you start going through those video lessons. If you go through those video lessons for the charting in the London Daybreak, you can start doing that right now. Set up your demo trading account. You can do that today. You don't have to, but you can also set that up. Start practicing trading in the market right now. Try it out for 14 days. Ask yourself this: would it be worth it at least to take it for a 14-day trial to see if this is for you for $1? Yeah, there's very low risk in this here. Plus, as I mentioned before, this is exclusive here for Investor Inspiration. You're going to have to do this by the end of this webinar. This is only for today. To get registered for this here, that 14-day trial. After the 14-day trial, you get locked in at that $59 a month rate. But all I want everybody to do is just focus on the 14 days, see if this is even for you. If it's not, you've risked the $1. It's only cost you $1 to get the charting software to take this all for a test drive. You get 3 free bonuses that Josh will show you how to download. So that's it, my friends. I'm gonna go ahead, I'm done. I'm gonna send that link out one more time to make sure that everybody did in fact get it. But on that note, I saw a couple questions here regarding like the workspaces and that. Yeah, the videos will explain a lot more of that. You'll get access. Let me go ahead. Oops. Hold on 1 second. Let me send that back out to everybody. I want to make sure that everybody gets that link. There we go. So yeah, you'll get access to all of these videos here. You'll get access to the onboarding videos, the different lessons on how to use the charting software. There's what, about 10 different lessons on that. Oh, actually, there's the link for the webinars. Oops, let me go back. You'll get the video for the London Daybreak trading strategy. You'll get all that as well. So yeah, if you don't, this is only for today. So on that note, I'm gonna go ahead and bring it to close. Thank you, everybody. There's a couple of you that just started in. Carter, I got you down. You said you registered. Evan and Tyler, thank you for that as well. So on that note, those of you that are registering, I wish you the best. I wish you the best in your Forex career. Yeah, it's at least worth, yeah, a couple of you say it's a no-brainer. Yeah, Jonathan just said this is a no-brainer. So I wish you the best on that, Jonathan and Caleb and everybody. So thank you for Investor Inspiration for letting us do this here. Hope you found the value in this. I'll leave this up for about 1 more minute so you can go ahead and take this for a test drive. So thank you, Investor Inspiration. I wish everybody the best in your new Forex trading career.